Hello and welcome to another update video about SEI. On the SEI chart, we've seen that corrective rally that I mentioned in the last video. So yesterday we talked here about the potential A wave low, then a potential B wave rally, which happened into resistance. We've also seen a bit of a reaction to our resistance area there at 80.8 cents. And maybe, just maybe, this C wave now starts, okay? So again, the support level, or let's call it a support range, that really needs to hold for trend continuation higher to form at least one more high to 93 cents plus. Better a little higher, possibly even the $1.06 level or $1.26. To maintain that perspective that this is going to happen with a high likelihood, the price needs to hold 44 cents. That's the main support level I mentioned about. It's the 50% retracement level of this rally here to the upside that started, okay? It started basically on the 13th of December with this swing low that was formed at, 21, 22 cents. So we take the distance of that rally and then we take the 50% retracement level as key impulsive support. Anything that breaks below that level can't really be an impulse anymore. The problem is that this would be a third wave ideally, and in a third wave it has to be an impulse or it's something else. And if it's something else, like for example a diagonal or even a corrective rally top, well, see, that's not really what we want to trade. We want to focus on impulsive structures. This one currently is one. The break below 44 cents would act as a major warning. So at the moment the 44 cent level did hold, obviously, or is holding. And as I said in the last video, it would even be ideal not to even break below 52 cents. So it's 52 first and then 44. Now, the price already reacted to our support zone. This is basically the area where we typically, or pullback traders can typically look for entry points. We've seen a rally, and I highlighted that in my primary scenario, the larger ABC structure is likely unfolding. So that it's likely that we get a larger fourth wave. Why? Just because the move to the upside looks corrective and it was quite a shallow wave 4. Okay, so that's sort of what I'm watching for, but there's a reasonable likelihood that wave 4 is already complete. So therefore, we don't know, right? You never know when the price dips into this area. So it requires a tactical approach as a pullback trader. You typically look for entries when the price dips into support, and then when it rallies, you might want to take some partial profits or move up your stop loss to break even. That's the advantage of pullback trading versus breakout trading. As a breakout trader, you deal with a lot of failed breakouts, and it hurts when you get stopped out, okay? Because your stop is typically quite far away. As a pullback trader, you have a little bit of time to find entries. If the price rallies, even if it's just a bit, you can actually take some partial profits. And if it dips back into the support area, then you might get stopped out at break even or even in profit. Or even if you get stopped out at a loss, it at least doesn't hurt that much. So I like pullback trading because of that reason. And to be honest, for anybody who found an entry point in this region, it doesn't really matter if it's a B wave or the fifth wave already. Because the fifth wave could be an ending diagonal, which can be, basically a 5-wave move, but it depends, or it consists of corrective structures. It's very hard to say and very hard to define that the fifth wave already started. It's possible, but it's a bit messy, this structure. So what I can say is if the price now breaks below, and we have to use Fibonacci support levels for that, if the price now breaks below 66.2 cents, it would suggest that the B wave is topped. Until then, it is technically possible and also likely that we are already in the fifth wave. Okay, so I think what it basically means for traders is, it might be reasonable to take some partial profits if you entered here. I mean, depending on where you entered, even if you entered at the top, I mean, this is still a whopping 18 to 19% profit. Okay, even if you just bought at the top of the box. And it makes sense to maybe take some partial profits. At least don't let a winning trade turn into a loser. Essentially, it's up to you. I just share some ideas that I think are reasonable and move up the stop loss to break even. And then if it dips back into the area again, it might be the C wave. So you might look for entries again and then take profits in wave 5. If it keeps going, that's exactly why you don't want to take all profits, maybe just partial profits. So that's sort of how, in the most intelligent way, in my opinion, this situation is handled. Now, if you haven't got an entry already, well, see, then the setup never triggered for you. You didn't hit the trigger when the setup was active. So that's then always difficult. But I think there's still a reasonable chance for the price to get back into the support area. It just takes a little bit more price action to confirm that. At the moment, this is a crystal clear 3-wave move to the upside from the lows. So it could be an ABC structure in wave B. Let's see. I mean, okay, if it breaks above the 81.4 cent level, basically today's high, what would happen then? Well, it would open the door for higher. It would open the door for a breakout in wave 5. The reason is that this B wave already maxed out the standard resistance zone. Again, it's not an invalidation point if the price breaks above it, but it just makes it more likely then that we're already in the 5th wave. That's my update about SEI. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.